Hi, I'm Tom Rutkowski. I'm president of Innovative Retirement Strategies. The purpose of this video is to explain how real estate investors can make more money by leveraging their retirement savings to invest in real estate. So I want you to start by thinking about your current retirement savings. It's usually in the form of an IRA or a 401k, and it involves a trade-off. You've got to make a conscious decision whether you're going to spend that money to meet your needs today or put that into a retirement plan where you can't touch it for the next 20, 30, 40 years until you turn age 59 and a half. Even if you're investing in real estate through a self-directed IRA, I applaud you for that, but your money is still locked away until you're 59 and a half. You can't touch that money. You're spending time and effort on it. So what I want to do is show you a better way of saving for retirement and having the ability to leverage that savings to help put food on the table today. One that doesn't involve a trade-off between meeting your needs today and saving for retirement tomorrow. So every day between now and the time you retire, you've got access to the money that you're putting away to help put food on the table today. The answer is very simple. It's permanent life insurance. And if you're not familiar with the difference between term and permanent insurance, I've got other videos on my channel here that you can take a look at, and we'll bring you up to speed, and then you can finish watching this one. But there's a couple of misconceptions that people have about life insurance. I think most people understand that permanent life insurance has cash value. I just don't think they understand how much interest that cash value earns. And secondly, I think most people don't understand that you don't take loans from your cash value, you take loans against your cash value. And that's the difference that makes this so powerful. So let's talk about the interest, for example. Most permanent life insurance policies pay anywhere between 6 and 8%, possibly even more depending on the policy, of interest per year on your cash value. That may not sound like a lot, especially if you're a real estate investor and you're used to making 10, 15 or more percent per year. But you got to keep in mind, this is occurring in a tax-free environment. Your cash value is growing tax-free, and you can have access to the funds tax-free. So to make 8%, for example, in a taxable environment, you would have to make 12% on your money in order to pay your taxes in a 33% tax environment to walk away with an 8% rate of return. So this is pretty powerful in its own right. But it's not about this, it's about the ability to leverage it. And that's the second biggest misunderstanding that people have about life insurance. Most people think that you're borrowing from a policy, but in reality you're borrowing against the life insurance policy. If you were borrowing from it, the money would no longer be in your life insurance policy, and you would have to pay the loan back before you had it working again. Policy loan is more like a home equity loan where the cash value is securing a loan that you're receiving from the insurance company. And that's what makes this so powerful. So I want you to think about this for a moment. If your cost of borrowing is, just for an example, 5%, anything that you can put your money into, invested in, that's paying greater than 5% is adding value to your overall net worth. That is, you're already got your money in the cash value. It's compounding and it's growing, 6 to 8%, as I mentioned. And if you can put your money into something, just for an example, a safe structured settlement paying 6%. So you have that grow at 6% with a policy loan that paid for it. You pay back the loan that cost you 5%, and you've got 1% left in your pocket, maybe less after taxes. But the thing is, that's 1% that you didn't have before. So when you add that to the return of your cash value, you've actually earned more than what you had in the cash value. And this is powerful. I mean, if you're a real estate investor, you know you're not going to make 6%. You have the potential to make far greater returns. And I'm not going to put a number on it, but if your cost of money is 5%, and you can do anything greater than 5%, you're adding value to your overall net worth. So that's, in essence, what it's all about. When you get back to the retirement planning aspect of this, you've got your cash value, which will eventually be able to provide you with tax-free retirement income for the rest of your life. you've also got the ability to access that money to put food on the table today and do your real estate business with that money and basically grow your business at a much faster rate. So I'm sure you've got questions. This was just a 20,000 foot overview of the process. I've got links to more resources, one of which is a half-hour recorded webinar that I did recently. There's information on my website and a link where you can make an appointment to talk to me personally. So I look forward to talking with you. Thanks for your time. Now go out and make more money with your money. Thanks.